Quite a day we have going on in the grain markets today, and let's take a closer look, shall we? Let's go to the corn market. Our quotes are provided by Bar Chart, and on the July corn, we're still up 11.5 cents at 7.86 3/4, and December new crop up 12 at 7.31. We're within 2 or 3 cents of our highs of the day in both of those. Soybeans, July up 16 1/4 at 16.08 1/2. That would be roughly about 6.5 cents from our earlier high. And November new crop soybeans gaining 19 1/4. We're at 14.74 per bushel right now, and this is in advance of the USDA reports coming out tomorrow. Well, July Chicago wheat is up 21.5 cents at 11.14 1/4. Strong action there, even though it's off of its earlier high by about a dime or so. July KC wheat, we're now at 11.96 per bushel. That's up 21 cents on the day. Minneapolis spring wheat, July is now 21 1/4 higher at 12.34 3/4. And believe it or not, that's off of its earlier high by about 13 cents. If you check out our cotton market in July, it is now trading 40 points higher at 143.34 per pound. Let's take a look at December new crop. That's up 68 points at 124.85. Todd Bubba Horwitz joins us now. He's with BubbaTrading.com. He's located in Las Vegas today, I believe. His office is in Chicago. But Todd, we had the CPI numbers that came out this morning. The Dow wasn't totally sure what to do with that. It sold off when the numbers came out. It came roaring back. But look at the energy markets today. If you look at crude oil, my goodness, it's over $5 higher. Let's bring up those prices here on West Texas Intermediate crude right now. That June contract on the crude oil market is up $5.73 at 105.49. So it seems like maybe there is a little shift going on toward commodities today. Could that be happening?
Oh, yeah. I mean, listen, the money is going to flow into commodities. You know, the equities are in trouble. You know, they're very volatile right now, and you saw what could happen on the CPI, why they reversed back to I don't know why they were up in the first place going into the number. They knew it was going to be a rotten number for the economy. They knew inflation is skyrocketing. And what's going to happen is not only are we going to have a supply-demand issue for the grains, which will drive them higher, but you're going to have money coming out of equities, which the natural first normal place that it usually goes is into the commodity market, and especially the grain markets. So, you know, everything points to much higher prices. You know, the inflation is so high, and it's the 835 they report today is laughable because, again, they don't count food and energy. And we both know, as you just mentioned, what's going on with energy. It's back to 106 a barrel, and it's going higher. I'm telling you, it'll probably make new highs this year in the 150 range if it keeps going.
So we have the USDA reports coming out tomorrow, but it seems like for the most part, they're pretty much template numbers. We don't really get any adjustments until the end of June. So for the most part, do you think that report is just kind of being overlooked this time?
I don't know if it's going to be overlooked, Marlon. I think there'll be some reaction to it. But I think, you know, everybody knows that right now weather's an issue. There's so many issues besides what they're going to report tomorrow that it won't be as powerful because of what's going on, you know, basically globally with Russia, and there's going to be a lack of crop coming from there and the bad seasons by Australia and by Brazil. So, you know, if we don't have Mother Nature doesn't cooperate here, it could be a real problem, which would really push prices soaring. But it would be kind of sad around the rest of the world. There'd be a lot of hunger around the rest of the world.
Looks like the diesel fuel and the RBOB, the gas futures, unleaded gas, are both about 12 cents higher. June natural gas is now trading 26 cents higher at 7.65 as it climbs its way back. It had been over $8 there for a while. Todd, we'll take a quick break here. If you don't mind, stick around. We'll come back and we'll talk about this livestock market on a Wednesday when we return. Over to the livestock trade we go. Let's dive into our live cattle futures. And on the big board here this morning, our quotes from Bar Chart showed June up $1.22 at 133.62. Interesting, with the surge higher in the grains. August live cattle, 60 higher. We're at 134.67. And we continue to have this market front-loaded with all the gains, the biggest gains on the nearby months. Feeder cattle, a different story today. Here you have the August contract dropping $1.82. We're now at 170.02. It's still about 70 cents off of its earlier low of the day, but it's off of our earlier high by nearly $1.50. And if you look at the lean hog market, here on the lean hogs, we'll go with that June contract. It's down 67 now at $100.90, and July down 107 at 101.90 per hundredweight. And let's go back to Todd Bubba Horowitz. Interesting how we have the live cattle trading higher today in the face of the strong feed grain markets. I understand it could pressure feeders, but how are live cattle hanging on like they are?
Well, Marlon, they've been pretty oversold recently, and they were down along some support levels, which would trigger, I think, a natural bounce. And I think that you're going to watch the cattle, both fats and feeders, are going to not only feeders going to trade up a little bit for grains, but they're also going to trade a little bit for crude oil. And with crude oil charging higher, it comes back to a budget issue to the individual family. If we can only have so many dollars to spend, can I buy a steak or am I going to have to buy a pork chop, right? And I think now the hogs have actually broken down a little bit here as well, which is a little bit concerning from price action. But I think when we watch this over time, I would suspect that the hogs are going to end up being much stronger because we've got this budget issue and these high prices and everything, which has to take away from the best protein.
Well, and we've been talking about that head and shoulders formation on the June lean hog chart, and it looks like maybe they have achieved their objective to the downside. However, I was looking at a different chart here just a moment ago, and it is trading below the 200-day moving average now, and that could be a big negative sign. I'm glad you pointed that out. And thank you, Todd, for talking with us. Todd Bubba Horowitz of BubbaTrading.com in Chicago, offices in Chicago. He's in Las Vegas today, but thanks for the help.